Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look and take a look at the dollar versus Canada. We have a Bank of Canada rate decision tomorrow. The expected cuts rate raised by 50 basis points at that time. That's keeping the dollar Canada supported, the Canadian dollar weaker. Let's take a look at the technicals that are driving this currency pair and what might shift that bias more to the downside if it's gone too far, too fast, and we get a sell the news type of reaction. So let's get started. First of all, taking a look at the weekly chart, the price today and this week has moved above this old high price going back to, well, that's 2020, folks. That level comes in at 1.4177 area. We came up toward that level in trading a few weeks ago, found resistance sellers against it. So two highs right here, and we broke above that level in trading here today, extending the range and to the highest level going back to somewhere in 2020. So the buyers are firmly in control. Don't get me wrong, but what would turn the bias around if we do get that interest rate cut of 50 basis points tomorrow, and then we get a reversal because of the price being gone too far, too fast. And so let's take a look at the hourly chart and kind of outline the levels that are key, at least to me. First off, let's move to the upside that we saw from last week's low, or one of the lows from last week, really Thursday low, to the high price that we saw in trading yesterday. We saw the correction come down to the 50% retracement level right here at 1.40928. That was a key hold. Not only did it hold the 50% retracement level, but it also held within this swing area right through here. This swing area is defined by a number of different highs right here, forming a ceiling. We moved above that ceiling here. We did come down in volatile trading right through here. Moved a little bit below the low of that old swing area right through here, and then fell below that level and used that level as resistance right here. We returned back to that level, moved lower again, and in trading on Friday last week, the price moved into this area right through here, and then based and moved above the level right here, forcing the price higher into trading on yesterday's trade. And that high price that we saw in yesterday's trade came right up to the high price that we saw a few weeks ago. The high price from 2024 moving down to the 50% retracement and basically moved to the upside. So in trading today, we have seen the price extend above the high prices that I've outlined off of the weekly chart, making new highs going back to 2020. And that should have led to further upside momentum, but it hasn't seen a lot of a continuation to the upside. We did fall back below those levels, and we are now trading near the old highs of 2024, near the 1.4177 level, currently trading 1.4178. So, key level here for both the buyers and sellers ahead of that key interest rate decision tomorrow. We could continue the move to the upside or fail and come back to the downside. So what levels are important on the downside that would need to be broken to in order to increase the bearish bias? And I've outlined one right here. This represents the high price off of this high right here. It came up to swing level right here, moved to the downside. We came up through that level right here, found support against this level here, and then resistance against it here, and then based against it here before moving to the upside. So this level at 141.45, a key level that if we break below that level, that would give the sellers some comfort, some confidence of further downside momentum. The next target area of importance to me comes against this swing area right here that I outlined earlier. Level also corresponds with the low price from yesterday, came in within that level. That swing area comes between 1.4388 and 1.41045. And if we were able to break below that level, I think that increases the bearish bias, and as traders, again, looking for other clues on the downside or other targets on the downside, but it certainly takes some of the steam out of the buyer's momentum. Absent all that, and the price moves up, it can't get below these levels. If it can't get below the 140, 145, the sellers ain't winning, folks. The buyers are still winning. So we have to keep that in mind and let the trend be your friend for the dollar versus Canada. But at least we know that what needs to happen on the downside in order to increase the bearish bias, give the sellers some hope and the buyers some cause for pause after breaking to new highs and potentially failing. So that's about my technical look at the dollar versus Canada. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.